Welcome to the investment markets overview for the week ending the 17th of March 2023. Confidence is defined as the feeling or belief that one can have faith in or rely on someone or something. It was certainly center stage in respect of the banking sector this week. And judged by the bank runs on Silicon Valley, Silvergate and the First Republic Bank, who all witnessed panic deposit withdrawals. The answer is that depositors have lost confidence in these banks and possibly the wider sector. The Federal Deposit Insurance Corporation, who collect fees from the U.S. banking industry to allegedly protect deposits up to $250,000 should a bank go bust, is actually a bit of a con, or confidence trick, as the amount in their coffers, somewhere between $55 billion to $85 billion depending who you ask, is less than 1% of the $15 trillion on deposit within the U.S. banking system. It gets worse, as discussed within this week's overview. The overview includes the performance statistics for the main stock indices, which were mixed, as were the commodities covered. Whilst sovereign bond yields were lower across the board, and the cryptocurrencies were higher, led by Bitcoin's 36% jump. Meanwhile, the regional coverage highlights the U.S. banking sector. The UBS share price as the Swiss regulatory authorities push it to acquire the troubled Credit Suisse. Whilst out east, we observed China's reserve requirement ratio changes for its banks. 11 U.S. banks announced $30 billion of deposits to assist the First Republic Bank this week. This show of support by a group of large banks is most welcome, and demonstrates the resilience of the banking system, according to a joint statement released by Secretary of the Treasury, the Federal Reserve and the FDIC chairs and the Controller of the Currency. Nothing could be further from the truth, as the FIDC has set a precedent to backstopping all deposits at Silicon Valley Bank and Silvergate, insured and uninsured. As this chart, courtesy of Ed Yardeni shows, the growth in uninsured deposits, i.e. those over $250,000, has ballooned since 2020, coincidentally when the Fed stimulus and the various Biden fiscal programs kicked in. This potentially puts the U.S. taxpayer on the hook for trillions of dollars if the banking crisis grows, which appears likely. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview published at least 40 times per year. Just follow the link provided to test drive the full weekly overviews. Also check out the link to our investment timing solutions, which may pleasantly surprise you on how to make investment a lot easier. Have a great week.